Often, when we are in a prolonged accumulation phase, people are not sure if we are going to have a pullback like we had before the last bull market started, or if we're just going to have a parabolic move up. Many people wonder how to position themselves now, and in this video I'll give you a magic pill to outperform 90% of the blockchain investors. Hello everyone, welcome back to CryptoGrid channel. My name is Zhao and firstly we reached 1000 subscribers, so I'm grateful to all of you who follow the channel, who like and comment on my videos. So if you have any questions or suggestions, feel free to write them in the comment section below and I'll reply to all of them. Today I'm excited to share how I approach situations in the market like the current one, when we can go both up or down. Obviously we can always go up and down, but at some moments the sentiment is pretty obvious, while in others you can see a lot of people speaking how we are losing momentum, how we're gonna reverse, and from other people you can hear how it's just a matter of day when spot Bitcoin BTF will be approved, how bull run and parabolic move up is ahead of us, and how it's just a matter of time when we're gonna reach a previous all-time high. Obviously, in the first scenario it would be best to sell all your assets now, wait and buy back at lower prices, while in the second scenario you should even accumulate more and sell it most likely in 2025, around 1 to 1.5 years after the halving. What is my stance on this? Well, neither. If you're trying to predict where the price is going to go, you will be wrong pretty often, and that's also okay, but you need to be positioned for both scenarios. Because of that, the question of when you should buy and sell is not the right question to ask yourself. The actual question you should ask yourself is how big percentage of your portfolio should be in Bitcoin and how large percentage of your portfolio should be in stablecoins. Let's look into the chart so I can go more in depth on this. So the first thing that I wanted to address when we look in the charts, this is a monthly Bitcoin chart and you can see the halving dates marked with the vertical lines. So the first thing that is really easy to notice is like how much time it passed from the halving to the market tops, and in 2012 halving it was like 12 months, in 2016 halving it was 17 months, in the 2020 halving it was first time 11 months, second time since we had double top it was 18 months. So usually this is some area when you want to sell, and the closer to the top you sell, obviously it is better. So if we look at when it was the best moment to buy at 2012, we don't have enough chart to look into it. We can measure maybe from here to here, but I'm not sure if that's the exact date. So it's again 13 months. Before the 2016 halving, we can say that we had two opportunities. The best one was 18 months, but anything in this area was much better than buying it afterwards, obviously. And in 2020 halving, we had one opportunity 17 months before the halving, and the second opportunity came just 2 months before the halving because of the virus that happened, unfortunately. So as I already said, in my opinion, you should never be 100% in or 100% out, because you never know when the market is going to reverse. Obviously the best thing to do would be to buy here, sell here, the whole your portfolio, buy here again, sell here again, whole your portfolio, right? But that's impossible to do. So if we could do that, we would pretty much like 20x our whole portfolio during the one bull run if we would catch pretty much every movement and every pullback, even way higher, but that's not possible to do. So my suggestion is like to estimate where is the bottom, where is the potential top of the market, and once you're looking at it, you should like at near the bottom you should be like 90% in BTC, near the top you should be like 10% left until you sell all your positions. Obviously for Ethereum it will be slightly later than for Bitcoin, since usually the money starts going from BTC to Ethereum, then to smaller caps. But the most important thing is not to ride your positions all the way down, because if you do that, instead of like taking a huge profit, you would have again a downside of like 70-80%, which is a huge drawdown in your whole portfolio. If we take a look at the current situation, you should be positioned anywhere from 50 to 70% in Bitcoin, in my opinion. Pretty much it's based on where you think the next bull market top will be. In my opinion, it's probably around 120k or something like that. And you want to be as much in BTC or other altcoins as possible when this parabolic move starts, obviously. Still, you don't want to be fully positioned and then you see something like this happen because you're missing a huge opportunity to accumulate more assets during that time. And this is the reason why I always say that you should always have some dry powder on the side. And same applies for Bitcoin. If you sell all your BTC and you are waiting completely that the price goes to here, then you again miss this move. So you always want to have some BTC to buy back, for example, at this pullback. So you have opportunity to sell here. Yeah, if you use this strategy and you are DCing in and out from the market, you won't make the highest possible returns on the bull runs, and you might lose some money if you start buying back. For example, if you bought back here and here, you wouldn't have that much money to buy at the actual bottom, but that's almost impossible to catch. And I think as the markets are evolving, we are going to have more formations like this one where the market is actually gonna surprise us. And if you use this strategy, you can actually profit from it. If you are trying to always sell the tops and buy the bottoms, you will often miss it. And the worst thing that you can do is that you can overestimate where the top will be and you just hold. And I know a lot of people that are holding some altcoins for like 2-3 years. And even though they're like 2, 3, even 4x from the bottom now, they're still experiencing diminishing returns because they bought it during the previous bull market. The next chart, which pretty accurately shows where we are actually in the market cycle, is MVRVZ score. So the first thing that we're looking at the total market cap of Bitcoin, and we can see the realized price of Bitcoin. Realized price pretty much shows you like at what price where the last Bitcoin moved, and the Z line, which is this, it represents like the difference of total market cap of Bitcoin and realized price. And usually this pretty much shows us at how many people are actually at unrealized gains. So when this line is increasing, that means that we have many people that are actually in the profits, but they are not selling yet. And if you look into this is actually one of the best indicators that estimated the market bottoms. And as you can see, when we are close to zero, that's actually the great moment to buy and accumulate more BTC. The red line in the past represented the area where it's best to sell. And now when you see at the last bull market, we had pretty much one top here, one top here. Honestly, if you ask me, I expect a large diminishing returns here. So probably the best area to sell during the next bull market. You can see that this line decreased from like 9 to like 7. So I would expect it to drop to 4 or 5 during the next bull market. And this is the moment when you should actually start exiting your positions. I also wouldn't be surprised if you experience something as we had here. So we pretty much went to around like 2.7 and then we returned into this green channel when it's actually a great moment to buy again. Also, if you're just new to the market, don't wait for this to shoot up and don't wait for it to return. Position yourself now at least in some percentage. The last indicator that is really useful when it comes to buying and selling is predicted funding rate. I talked about this indicator a lot on my channel, and you can see that like when we get into the extremely highly negative funding rate, this is usually a good moment to buy. So this is pretty much at market bottom. This is like at one pullback. This is again, before we started going up, we had pretty strong negative funding rates. Same applies if you are looking at the top of the market. So if you look into the previous bull run, for example, you can see negative funding rates going even to 0.2. So this means that people that were actually longing the markets, they were paying pretty high funding fees every 8 hours. Maybe on some exchanges, even more frequently just to stay in their long positions. And usually, like, even when we had this pullback, often people like expected continuation to down. You could see, if you would be looking at the funding rates, you could see again negative funding rates and a great area to buy and accumulate more assets again. Interesting thing to notice is, if you look into the second peak of the bull run, we didn't have extreme funding rates as we had first time. They were still going into the area at like 0.05, which is pretty high, but it's not high as we had in the first one. So sometimes we can stay at like high funding rates and keep going up, and sometimes we can stay at negative funding rates and continue going down, as it happened here, for example. So this is also something to have in mind, that you should never use one indicator alone. You should always look for the confluence on different indicators. So if you see the confluence of these three things, so extremely negative funding rate, the MVRVZ score close to zero, and all that happening like year to year and a half before the halving, that's probably the moment when you should be nearly 100% positioned in the market with really low amount of stable coins sitting on a side just in case. While if you see extremely positive funding rates, MVRVZ score going to 5 or 6, and being around a year and a half after the halving, that's the moment when you should be exiting your positions and focusing on your bear market strategy. So I hope that this video was helpful to you and that will allow you to outperform majority of the people in crypto markets. Please consider subscribing. If you have any questions or if something is not clear enough, feel free to comment below. I always reply to all the comments. Thank you for watching this video. Stay strong and healthy. Bye.